Storms in the Gulf, tightening supply due to higher Nat Gas and coal prices. What is going on with WTI Crude Oil at the moment in terms of outlook and price action? In this week's report, I take a look at the technical analysis to try and unravel the picture some more. Hello, I'm Stephen Ho, trader and founder of the Stop Hunter. So before we can carry on, a risk warning for you to pay close attention to. The content in this video is not investment advice, so please seek the advice, help of financial professionals or financial advisors before investing and trading. And trading and investing involves a high degree of risk and your money is at risk, so be very careful. So with that out the way, let's get on with the analysis. So let's get straight into some WTI sentiment, and we can see at the bottom there seasonality picking up again, maybe for the next month before pulling off straight up to the COT data. The red line is the commercials just pulling back slightly, which is good for the bulls, and our black line there is the large speculators, and you see just popping up through the 10 line, which again is a bit more of a bullish indicator, and price trading above the moving averages, just pulling back slightly, and overall maybe a weak bullish outlook on the sentiment there. Rig count numbers from our friends at Baker Hughes, well, it's still all positive, +9 from the prior count. Remember looking at the US figures there, and the change from last year also up +257, so reasonably bullish outlook there. In regard to inventories out this Wednesday, well, it's forecast to be minus 2.4 million barrels, and last week's figures slightly better than expected, minus 6.422 million, but like I've said in previous videos, very difficult to ascertain where the price is going just from this number alone. But at the moment, you could call it again, like other bits of the analysis, weak bullish. So onto the weekly line chart, and there's not much change from last week. It's slightly down, and it's still trading between that $63, $75 range. It's got to break up through 75 if it wants to push to those 90s. Downside 61.8 Fibonacci line at 53. Then below that 38.2%, the other significant Fibonacci down just below 40, where there's a lot of price noise, but looking pretty neutral on the weekly line chart. What's the daily Heikin Ashi telling us? Well, the two signals, bottom right there, both bullish but weakening off. Volatility still heading lower. And if we jump onto volume, also trading under the moving average. So all pretty neutral there. And jumping up onto the price, we can see the pink and blue 2 standard deviation regression trend there. Price hovering at the lower end of that and within the box setup. So again, pretty neutral but a slightly improving situation. And on the Renko, you can see the two signals there, both weakening off. The stochastic at the bottom actually is more bearish in the short term. Remember, I'm using a 50-cent block size here, so we're going to get a lot of signals and action in the shorter time frames, hence why they're slightly different to the Heikin Ashi signals. And price pulling back to within the pink box range and looking more neutral, still trading above the moving average, which is the green and red line there. And if we look at the Fibonacci, they've been left on from last week to give us an idea of what's what. I've only adjusted the trend line Fibonacci slightly to the current price to give us more accurate information. But downsides, support round about $68, then 66, and then 64, and to the upside, it's going to be those highs in the mid 72s, the first stop, and then you're talking 73, 75 before it hits the resistance, before it can try and go any higher, and then probably the first stop's going to be 77, 78 before trying to break into the 80s. But overall, we call it neutral, weak bullish on the Renko. I'm going to maintain the weak bullish outlook from last week. due to those underlying fundamentals, and I do like to marry in the technical analysis with fundamentals and sentiment when I'm trading crude oil. I find it a lot more helpful. But if we look at the action at the moment, I say Heikin Ashi pretty neutral, slightly weak bullish, same for the Renko with some shorter term more bearish signals there. And if focusing on the targets, bullish side, upside, risk return 1.6, 3.6 to 1, so not too bad there. Downside still something in there, but lessening from last week in terms of risk return, 1 to 1 and 1.6 to 1, so not as attractive as the upside at the moment. So summary then, overall weak bullish, maintaining of the overall opinion. So in terms of the technicals, WTI looking a bit flat to weak bullish at the moment. We've had the storms in the Gulf and the switch from Nat Gas and coal due to the prices back to the crude oils, which does sound bullish. Not seeing too much in the price action at the moment, but that could be driven further. So watch out for those fundamentals, because I think that's going to be the main drive actually over the technicals this coming week. Let me know in the comments below what you think of the crude oil price, where it's heading next, and any other thoughts you might have, any strategies, ideas around crude oil at the moment. Let me know in those comments. And if you've liked today's technical analysis, I'll put a link in the description below for you to follow if you want to learn more. If you like today's video, please give us the thumbs up. Don't forget to hit the subscribe and bell buttons to receive further notification of content I will produce just like this. And all that's left for me to say is thanks for watching, good luck with the trading, and I'll see you in the next video.